Hi, and welcome to the third episode. I'm your host, Vincent Young, and today I'll talk with Pekka Koskinen. He shares how they developed the product-led sales motion at Leadfeeder, long before terms like PLG and product-led sales existed. This interview is part of my upcoming book about product-led sales. If you're doing sales today and are wondering how you can leverage PLG, then this book is for you. For early access, visit plgandsales.com. Now let's introduce Pekka. Before starting Leadfeeder, he founded 3 other businesses. These include a software development company called Solinor and a payment gateway company called Payment Highway. In 2004, he founded Snoopy, a web analytics business that will provide much of the early learnings for Leadfeeder. These businesses have all been sold, and today he's fully focused on Dealfront, the result of merging Leadfeeder with EchoBot after a €180 million investment from Great Hill Partners. At Dealfront, we work together on a daily basis, and we're building on the product-led foundation that Leadfeeder brought into the joint company. All right, Pekka, great to have you here today. And
thanks, Vincent.
We'll be talking about something that we don't spend a lot of time on usually, which is how Leadfeeder actually got started and how you built the growth model over the years.
Sure. So we started Leadfeeder in 2012 with my co-founders, Herkka and Vicent. And before that, we were running a web analytics company called Snoopy. And that was a Finnish-based business, like majority of our customers was in Finland. We were selling with outbound sales, and we were figuring out like how to go international. Now we were living around like 2010. And we started to build outbound sales teams in different countries. And we learned that doing the outbound sales-driven internationalization motion wasn't that easy. It was very costly. And at the same time, we were seeing really great startups coming from US, like HubSpot and others that had this like nice free trial experience, and they were generating leads like with fraction of the cost that we and also they were able to close the deals like better because customers already got some value before they needed to purchase something. And when we made an exit from Snoopy at 2012, I wanted to build my next startup very differently. So building Leadfeeder to be this international, global, product-led growth first, selling actually with dollars and not with euros, because we thought that we need to look and feel like a US company. But also this meant that we wanted to become like really effective and efficient. Like how do we go to market? And how we did this was that in the first couple of months, we built a prototype of Leadfeeder and then just put it out there. We didn't even try to sell. There was no price. It was free sign up, free tool. Just sign up, use it, and give us feedback. And we started to do Google AdWords on it. The idea was to start validating that actually there is a problem and that we have a solution for it. And we ran Leadfeeder as a free product for a year until we then put the most interesting features behind a paywall and started to validate kind of like the next validation step in the startup journey, which is, are customers willing to pay for this? And are they willing to pay like month over month over month? Like, are they willing to continue on this, which is a key thing to prove the product market fit? And we back then didn't have any like support or sales around it, so it was just like pure self-service. And like luckily we started to get like purchases all over the world. Like we had signups from US and Central Europe and Nordics and everywhere, and many of those then found the product to be good and just put their credit card in and started paying for us. And we had developed, of course, like analytics all around it. So tracking how much can we drive traffic from AdWords, how well do they convert into signups, how the sign-up funnel works. So what is the conversion to paid? And then we started to improve this. And we saw that if we can get into touch, for example, in the beginning, we only had like support. We didn't have customer success. We didn't have sales, but we saw that if we can talk with customer through support even, then the probabilities of us making a sale was higher. And then when we had a good flow of trials coming in, we started to think that, hey, would it make sense to contact these and sell to these and explain them better how to use the product? And we hired our first salespeople that were then contacting the most promising trials that we got. And that worked really efficiently compared to the old model what we had experienced in our previous company where we were doing cold calling. And this is how kind of like the product-led motion got started, and then we started to add these commercialization steps on it and started to hire more people to call the trials, and we were then experimenting with like what kind of trials are we conducting and how much effort are we putting into them, and we were quite like light touch, so if they didn't buy, then we moved to the next one pretty quickly and didn't like stuck with the like forcing the sale. And we scaled this motion many years until then we started to look, I think it was like 2017, we already had several millions of ARR. Then we started to really look at the other channels as well. So with inbound marketing, you can only reach those that are already searching for the solution. But we knew that there's a big group around these innovators and early adopters that are not yet knowing that they need our solution. So you can only reach those by outbound. So then we also started to invest in outbound sales, starting to experiment that, and also channel partners like marketing agencies, for example. So those were like two ways how we can go outbound. So having someone else talk about us, which is the marketing agencies, and then hiring outbound salespeople to contact bigger clients. And then after that, we've been evaluating the customer acquisition cost compared to the lifetime value that we are getting from each channel, and started to put more money behind the channels that had the best ratios here. And that's how we then ended up with this model where we have several channels, and they serve different purposes. They target different audiences, basically.
You mentioned something interesting right at the beginning already, right? You first wanted to get people to use it, and only then figure out like, okay, are they willing to pay for it as well? And I know from some of our other conversations that actually in outbound, you're still doing something that is a bit unusual, right? The outbound motion is still focused on getting people to use it first, right? Instead of the traditional sales approach of what outbound usually does is sell something and then give access. So how did you find these ways like to do something that's more unconventional?
Yeah, it is true. So how our outbound worked was that it still went through the free trial phase. So there was the usage phase. And this was kind of like a must-have, because on the website we were pushing so much this like take the 14-day free trial. So if we just tried to sell somebody with outbound and they would visit our website, they would say to the sales guys that, hey, I want to have the 14-day free trial before I decide. So it was kind of very hard to not go that route. And we then just decided that, hey, in outbound sales as well, like let's try to have them go to the trial. And because we also knew that if somebody takes a trial and they install the tracking script on their website, and we can demo the product with their data, with their website visitors, with their customers, it's way more powerful. And we like, of course, we had tested this. We saw what are the conversion rates with that kind of clients where we demo their own data compared to us demoing some like our website data on some demo website. It was like totally different, and we could already start like setting up the customer account, some like searches or filters like during those demo calls, and that proved proved to be very powerful, and the customer could then just after the demo they have access to the tool, and they can just continue from there where our discussion left. So that was really powerful, and then we just basically called them and tried to close the deal because the product has already proven the value.
And you walked through some of it already, but for you, what were like the key moments on the journey, especially when talking about the go-to-market?
Yeah, so I think this is related to the what are the steps to build a startup actually. So in the beginning there was the validation to like, is this is there a problem, and do we like solve it? And for that we wanted to, and what I advise many other startups also to do, is to just give the product out for free. You can always upsell them. If you put a price on it, you're not going to lose any revenue because they didn't pay in the first place. And then there was the second phase, like pick the most probably working go-to-market model and start trying to close the deal and get the validation that people are actually using and staying with the platform. And if we look at like how do you build a startup, there's this product market fit stage, and the next stage is product channel fit. So what is the effective go-to-market motion to sell this? And you always start with some like one, but then it makes sense to start testing the others. And typically there's like inbound, there's outbound model, there's partnerships. There might be something else as well, some like ISV route or something, but those are the most typical ones. Inbound, outbound, and partnerships. There might be variation, like is inbound like purely self-serve, or is it like inbound touched, which means that there's also sales there. We had these like 4 different channels that we monitored, and then you start putting small bets on them, start to see like how well they perform, start improving them, looking at the metrics, where do you have the best LTV to CAC. Of course, it takes some time to understand what is the churn through these different channels, so that's the LTV part is a bit challenging sometimes to calculate, but in the beginning the CAC payback time is probably the best metric to look like how quickly are we getting the sales investment back, because that's typically easier to calculate, like what are the salaries of the salespeople and the marketing cost basically. And after that, just like putting more money behind the ones that work, of course taking into account that they need to be scalable. So the great thing in outbound sales is that there's no like hard limit. You can hire many salespeople, and if the market is just big, it will scale. The challenge with inbound marketing, especially with Google Ads driven marketing, is that it's very limited on the search volume. So when you start putting more and more budget behind Google AdWords, Google will start showing it to less relevant audiences. So the conversion rates from those ones that you like added is actually like very low, because the averages come down, but especially the ones that you just added, those typically perform quite badly. So you try to find a sales channel that is profitable, is scalable, and is predictable. And then if you find that, or if you find those, then you go to investors, say that, hey, put €1. We can like just invest us a lot of money. We can turn €1 into €5 in like 12 months. And yeah, that's how I do it.
Right. And something that you mentioned before as well is that when you added the sales team to the free trial motion, you made them call the most promising leads, right? And also you said we're keeping track of that investment in terms of sales and marketing to make sure that this is actually profitable. So can you talk a little bit more through like how you do that? Because this is challenging for a lot of companies. figuring out, is it actually additive in terms of results to add that sales team or to add PLG, and what were your experiences there?
Yeah, so we were looking at the conversion rates per segment. So what we learned was that when we were selling, like if there was no sales touch, I think the conversion rates were around 10%, if I remember correctly. And then when we added a sales touch, then for that segment, the conversion rate was around like 40%, so like 4 times higher. Then when we started to have metrics like how many deals one salesperson can handle in a month, how much they can close more, we then were able to calculate the effectivenesses. And in the beginning, we called only the like the biggest trials that we got, and then we started to widen the scope, calling like smaller trials as well, and really searching for the best fit. You probably end up in a situation where you are calling the like probably 50% of the biggest ones through. But then it's also important, like when do you give up? When how long are you trying to keep selling to them? And a thing that many companies do wrong is that they stick too long with the clients that are not yet ready to buy. What we did was that we pretty quickly moved to the next one. We also had this freemium version that, like, if you didn't buy during the trial time, you could keep on using a limited free version. So we didn't really like lose them. We just like get back to them after 6 months, and the product had developed already quite a lot. So it was like logical to get back to them. Hey, would you want to have like a new trial in 1 year and evaluate again?
Knowing when to give up, that's a really good insight. When you think through the journey, were there any things that just plainly failed, or that you remember, things you tried?
I need to think about that, like especially I would say that in the previous company, the going international with the sales-led model failed. That was the learning there. When it comes to Leadfeeder, we could have started to do the other channels earlier. We were quite like religious on the inbound model and didn't want to really add the outbound model on top of it. It was quite late in our journey when we added that. Like, we could have done that way earlier. But there wasn't anything that like really like failed. So of course in the beginning, like, things don't work, but if you have the analytics in place, then we were able to make them work at some level at least. Partnership model is something that we have been struggling with. Like, how do we get the marketing agencies to push us even more forward? So that hasn't been as effective as we thought. What is the business model for the partner to push us forward? And also, like, they are many times expecting us to market them to our customer base, which we are not really doing. So I wouldn't say that we failed here, but we haven't really nailed this one, at least yet.
Mm-hmm. So coming then to the people, like what were some of the key roles that you had in place to make all of this happen?
So in the beginning, we only had support. So we had trials coming in, we only had support, and through intercom. So we had and still we have a chat support in the product. So that's the main way how customers can get help. After that, we started to recruit salespeople, and we wanted to we saw that we don't need these high velocity salesmen. It's more people that can help the customer take the value from the product and understand internet marketing. So it's this like sales assist role. So you're not really selling, you're just showing the value of the product, and then the customer just wants to buy. So it's a bit different focus there when it comes to selling. So we try to hire people that know broadly internet marketing and can add value to the customer. And it took quite a long time before we added then customer success into the mix. But then really saw that when the product got more complicated, we needed to have also people to help customers go beyond the first use case they saw. But we've always tried to keep the product as simple as possible, so we wouldn't need to spend too much time there. And because we came from this automated sales where like volume is the key, in the beginning we also made sure that the automated onboarding works well. We had support materials and we tried to do things on a scalable way because we already had the volume.
Good. So then last question for today, like thinking back of the whole journey, would you have done anything differently?
Probably. Like it's easy to look from to history, but I think the journey we went through is quite like logical. I wouldn't say that there's like big things that could have gone differently. We could have maybe scaled this even more aggressively in the beginning, but I think the way we did it makes a lot of sense, and we didn't raise that much money, only a couple of million, and we're able to be quite cost effective with the investments we got in.
Great. Cool. Well, thanks for taking the time to share your experiences today. Is there anything you want to add before we close off?
Well, building a startup takes a long time, and especially the early years are many times really a struggle. But once you hit the product market fit and product channel fit, then it starts to go really well if you just keep the eye on the customers and the numbers. And I would really emphasize to make sure that in the beginning the KPIs and the product analytics is correct, because that was the instrumentation we used to fly the plane, so to say, because otherwise you are flying blindly if you don't have that in place.
All right, great. Thank you, Pekka.
Thank you, Vincent.
All right, that's it for this episode. Another great conversation today. Clearly the focus on usage before even charging money for the product helped Leadfeeder build a strong product experience. Beyond that, it's the little things that make a model work, like knowing when to stop chasing a lead. Also, be on the lookout for my upcoming book about product-led sales. To get early access, go to plgandsales.com. Thanks for listening, and see you next time.